And now we're going to move straight right into our next speaker, who is someone who is going to present probably quite a different perspective than the previous speaker we just had. So we're going to hear from Anthony Craufurd, who is the director of Visa Ventures. So he's working on ventures in Visa in Europe, and he's going to tell us a little bit more about what he does and introduce himself now. So welcome, Anthony. How are you doing?
Hi, I'm very well. How are you guys doing?
I think we're doing as well as we can. I think, given the circumstances, try not to go stir crazy, right?
Yeah,
Um,
unfortunately now, so I live in Reading, so the idea of going out of my house as the quarantine was lifting is now slightly less appealing.
yeah, I can see how that could be the case. Oh,
Yeah,
sorry
so
to hear that.
interesting times.
Definitely is, but at least we can take your mind off it with some fun, juicy talk about fintech. um, so, if you could just introduce yourself quickly and your role and what you do.
Yeah, so hi, I'm Anthony. I've been working at Visa for almost 10 years now. And my current role is in the venture organization, helping Visa find and identify startups across Europe, build commercial partnerships with them, and figure out how we can work together and where it makes sense, making equity investments.
Hmm. And so, obviously everything's kind of going insane now. Do you think there's a difference in what you're looking for now versus what you have looked for? Or, are you kind of constantly reevaluating what you're looking at?
So I think the entire ecosystem has gone through a strange little kind of 3 month roller coaster, right? And I think we're definitely into kind of Act Three now. Like Act One, there's a financial crisis brought about by the virus. Everybody's in not quite panic mode, but battle stations. Do we need to get ready? Sequoia put out a memo, which everybody gets scared about. And there's an initial, everybody's triaging and firefighting. Then we hit this weird pause through kind of like April and May, where everybody's like, we're wondering if the ecosystem's going to recover. Is everything going to be okay? And it was very easy to just say, we're going to wait one more week, one more week, one more week. And we had this kind of just stasis and hiatus in the middle. And then it seems in the last month, all of a sudden, everybody's just about kind of reopening and saying, okay, we are clearly in this for a longer haul. It's not going to go away. We've got a 12-month problem, not a 12-day problem.
Mm-hmm.
What do we need to do about it? How do we plan? And now everybody's starting to really look at what does that mean for opportunities as well. I think this is acting more of a catalyst to a lot of the changes that were already in flow and a lot of the issues we were already seeing in banking and fintech. And this is just bringing a lot of them to the front. And I think for a lot of the big traditional banks, kind of really forcing them to make some harder decisions than they were ready to.
Mm-hmm. Yeah, and that's actually one of the questions I was going to ask. Is a lot of previous speakers in other episodes of the webinar have really brought up how they think that this is only speeding up the applications and the adoptions of technology in basically all of the aspects of life that we could have had now that, we need them even more than ever. Do you think there's any, like, are there any things that you would particularly point out that have suddenly kind of gone a lot crazier than they would have otherwise done?
I think I don't think anything has gone crazier than we expected. I think we've seen some weird behaviors which are just not going to continue. So in Germany, we saw consumer loans defaults drop, right? So all of a sudden, the saving rates in a lot of, because everybody's locked down at home, we're seeing this huge short-term spike in saving rates in a lot of European countries. And so the common logic of, oh, we're going to have a recession, we're going to have a lot of people made unemployed, you're going to see spikes in defaults on loans, higher loan loss performance. And all of a sudden, that just didn't happen in the consumer industry. All of a sudden, it's like, oh no, consumers are just putting money away, they're paying their debts. Like the reaction from national governments to create mortgage holidays, etc., actually really cushioned the blow for the majority of people. And so where we'd have expected to see a surge of people moving to alternative lenders or alternative credit, it's actually been the best opportunity for a lot of the incumbents to defend their patch and look after their kind of high quality customers. In payments, we've seen a great acceleration, right? I think it's been fairly well documented, but people have been saying cash is dirty, don't go passing that around, you should be using card, which we're not unhappy about, obviously. And then the growth of e-commerce, again, has been pretty good for our business. But the side of it, which if we want to be slightly more negative, nobody is traveling, right? And we think that's probably going to continue for 12 or 24 months at least. So normally people would already be booking their holiday for next summer, and that's just not happening right now, right? Nobody's taking that risk. So we're seeing swings and roundabouts. The economy's moving in a bunch of weird ways, and I think we're still not through that slightly topsy-turvy time. Give it another month or two, I think we'll get to September, October, and then it will start to look more like a predictable trend. But right now, yeah,
No idea.
Nobody has any idea which way things will go.
Okay. Well, fingers crossed that it does settle down and we don't have that scenario of let's just give it another week. Oh, we'll see what happens in another week, right?
Well, even on that side, I think people are now just becoming happy with that sort of risk they're going to have to take. But if they're going to take increased risk on timing of doing a deal, they really need to de-risk it on other aspects, right? So you're seeing the focus on the quality of deals that are going through and the focus of the background that's needed. That's probably where the swing is, right? We're seeing lots of bigger companies raising, like Checkout just putting together that big round, right? That was a company profitable, has strong revenues, has strong growth. It now is a perfectly good time to invest in an e-commerce acquirer.
Okay, so there's positive spots, I guess, that people can look to. And someone's asked, what are your thoughts on will anything change about your strategy or Visa in general in the event of a second wave? Does that change anything?
I don't think so, right? Our long-term strategy, we have a huge benefit of being Visa that we're in an industry which is fairly slow-moving most of the time. Contactless at the moment is like being talked about as a great success, but the first contactless transaction started in 2007, right? And that's taken us over 10 years to get to where we are now, where it's still not the default and still not the basic thing. So I think a lot of Visa's longer term strategy will probably stay the same. It is all about growing digital commerce. It's about making that world better. Some of the tactics might change, right? So I think in the short term, the small enterprises, small businesses who are being forced to go online for the first time, the drive for that kind of multi-channel, I'm not going to say omni-channel because it's not really true, but moving into that multi-channel commerce, there's huge opportunities to help this businesses who are making that transformation right now. There'll be a lot of them doing quick and dirty things just to get it working, but then they'll start to think about their business in that way over the next 12 or 24 months. I think as an example, a lot of the coffee shops, like we know that London is full of lovely independent coffee shops who will have their own house blend of espresso beans. They can't serve coffee, but they're all now online selling you a kilo of beans at a time and starting to build an internet presence. And how does that stuff translate? Is that something that's just going to continue because people are going to work from home more? And all of a sudden, these independent coffee chains need 10 or 20% of their revenue to come from e-commerce. I think there's a lot of those shifts which in the short term will put more energy and focus on because that's where the greatest pain is in the industry right now. But for our long-term strategy, yeah, it's still about digitization. It's still about being the best way to pay and be paid.
I was actually going to put to you the same question I put to Rishi from earlier, which was about, the importance of a resilient business model and what you think that means. But it seems like you've just brought up, for instance, the example of these indie coffee shops that are moving online. So do you think that it's actually more important to have to be adaptable rather than to start out with a quote unquote resilient business model?
It depends what industry you're in, right? So I think if you're in retail and you're smaller, you need that agility, right? I think even the coffee shops, you see them changing their menu, and then all of a sudden they all needed to have red velvet cake on the menu a couple of years ago because it was this ultimate photo for Instagram, right? You want a little flat white and the red velvet cake, it looks amazing. So they all just had to have it. It was impossible not to, even though it's just a vanilla sponge cake, right? So you see a lot of that stuff happening, and a lot of those business owners already live that way. It's just now they're being asked to do it with different skills than they had before. When we think about it in banking, I think the challenge, and I think Rishi nailed this part of the question, is it is just about the ability to be profitable and generate cash. And I think what we're seeing is the businesses who really nailed that and the fintechs who had that in mind are doing fine. And the ones who really didn't have that revenue as their number one mission are having to make compromises, right? The challenge I think we have in Europe on that resiliency is banking specifically has been under pressure for a number of years. Interest rates are at all-time lows. So how do you make money on lending? transactional revenue as the other big half of it, but increasingly consumers are being told they can have everything for free and they can have it cheap and easy.
Mm-hmm.
And the traditional banks are really struggling in that environment and having to cut costs. I think the guys at Oaknorth have shown an amazing example of actually they can offer a much faster, higher quality product. They can deliver it at a far lower cost than a traditional incumbent bank. So
Mm-hmm.
they can create margin where it was completely squeezed out before, and that's been a huge part of their ability to be profitable since day one, right? And that's a huge advantage for them as a business in this economic downturn when everybody is squeezed. If you have more margin, you can take a bigger squeeze, right?
Mm-hmm.
People like TransferWise who've got customers used to paying fees for services and saying this is what you're paying for, we'll make it cheaper when we can, have got that in their back pocket. Whereas we've seen that Revolut are getting all up in arms because people are telling them they're going to charge them for FX rates at the weekend and charge them on a Monday and a Tuesday and a Wednesday, and that's not the promise that consumers had, right? And so it's much harder to increase prices when from 0 to 1 than from 1 to 2.
Sorry about that. I think my Wi-Fi has just done something strange. My apologies.
Not
Um,
a problem.
but I think I heard you leave off on the pressure that's on kind of the businesses with the smaller margins. And so would that be one of the things that you look at in your position? Are you looking at margins now, or do you think that this is going to kind of increase the importance of margins in a business when, investors consider where to put their money? Is this like a new?
Yeah, naturally, I think when there's other stresses, like your contribution margin becomes much more important, right? And I think we're seeing it in our existing companies are kind of really sharpening their pencils on their marketing spend is such an easy thing to cut in a time of stress. But you really need to know, like, your CAC and LTV numbers need to be really tight so you can understand when you're dropping your marketing costs that you are going to have a revenue cost and keeping it really clear. And you'll see that, I think, for all deals being done, founders and CEOs and CFOs especially, you can draw that line of exactly where the revenue comes through, what is the value of every single client we have, and can we price that effectively. You just need to be able to understand that at the current time. I think we're seeing it, businesses we've invested in and ones we're looking at. That's the key question at the moment. It's not just about how much revenue you have, but the quality of that revenue and how well you understand it. Is it under a 5-year recurring SaaS contract, which means it's going to be locked in and has room to grow? Are you having to kind of just pay marginal usage fees, which if you're doing a kind of pay-as-you-go API model, which lots of the fintechs were, and the volume is 0, your revenue is 0, and that's not such a fun place to be.
Doesn't sound like it would be. And someone here has brought up in the comments China, actually, and that ties in a little bit to what you mentioned earlier, how you said that the first contactless payment was in 2007, and it took us this long to get here, but here isn't even halfway to, China, right? So from your perspective in Europe, I guess, which I assume is where most of your investing happens, do you think that there's going to be a difference in how fintechs handle this and payments, for instance? Do you think there's a difference in how payments comes out the other end of this versus businesses abroad in Asia, for instance, where there's so much more adoption, or America, where there's, I guess you could argue, less adoption, for instance?
So I think payments is a two-sided network, right? And I think if you ignore the technology that's being used and you just look at the power of each of those individual networks, I think increasingly it's about where do you have the density and where do you have the activity, right? So if you look at a lot of the big WeChat Pay, Grab, etc., in Southeast Asia and China especially, they've built incredibly dense networks, but they're all domestic, right? But they have huge transaction volumes at very low fees, and it all works within that ecosystem. Visa, we've got the same kind of effect in places like the Nordics or the UK, where we're at very high penetration. We're seeing high uses of card in face-to-face, high card penetration in e-commerce. But that's our kind of existing business, is fighting to get that number as high as possible, right? We want to be used in as many different contexts and be the preferred customer choice. So I think they're going to all face the same challenges. I think those businesses are still going to need volume going through them, and an economic slowdown for everybody just means everybody's spending less money, and we're all going to be squeezed the same way, right?
Mm-hmm.
So the advantage we have in a certain way as cards in Europe, right, is there's a lot of physical infrastructure which is ingrained in every shop,
Mm-hmm.
and yeah, we ignoring the recent kind of court cases, that's kind of the relationship between Visa, the banks, and the merchants is pretty symbiotic. We all benefit from it, and we all need to just find a middle ground to keep it moving.
Mm-hmm. Okay. And so then from the perspective of someone who's in charge of ventures and talking a little bit more about the companies you work with, are they mainly European, by the way? I asked.
Yeah. So yeah, as an investment group, we're obviously a global team. I cover just Europe, which is kind of political Europe. So the European Economic Area
Okay.
is within our region. The way we work with the startups, we're looking to partner with startups and invest where we can make a difference in that company, and where it's going to give us maybe a slightly different relationship than just an arm's length commercial relationship, right?
Mm-hmm.
And so for us, and the kind of your org chart is your product. I report into the European CEO, who has the European revenue for Visa as her number one number, right? And so
Mm-hmm.
anything we're doing is typically focused on how do we drive product adoption or drive Visa revenue and activity in European focus. And given what we've got with PSD2 and a lot of the regulation around SEPA credit transfer, DDs, etc., IFR, we've got some very specific scenarios in Europe. And I think we kind of touched on it at the beginning. The traditional banks, who are our traditional clients, are all under pressure. And so when we're looking at investments with a European context, it's how do we help that client base? How do we help that ecosystem to perform better and
Mm-hmm.
increasingly drive better customer outcomes?
That's interesting. And so you brought up political Europe. And I don't
Yes.
want to turn this into a discussion that's too spicy, but I have to ask, do you see any problems arising out of the current Brexit situation? Do you think any thoughts on that, or is that just what it is?
It's going to be volatility. Personally, I think I hope we stay. I think we get a lot of benefit from the cooperation, right? I
Mm-hmm.
think we're just going to have a bit more friction. We've all seen the power of passporting. That's probably going to be reduced, right? We're going to see less talent coming in and out of the UK and in and out of Europe. As Visa, we're fairly well insulated, right? Because we operate on both sides. So we have European businesses, we have UK businesses, we've got both in our investment portfolio. It's not like we think that the UK is going to disappear and Europe's going to go up or vice versa. But it's just going to increase friction, which is going to make things slightly harder and slightly more expensive for everyone, unfortunately.
Mm-hmm. And like you mentioned, PSD2, and Europe has a lot of is quite careful about regulating a lot of things, and they seem to be, I don't know, setting standards globally, I guess, for regulations. Do you think that the UK is still going to keep up with regulation? Do you think there's going to be a divergence there?
I think it's really strange on the way that, especially if you look in the fintech world, the FCA is probably one of the most progressive, involved, and active regulators in Europe, right? The European system for regulation of setting standards on a kind of European basis has always tended to be slightly following what's actually already occurring.
Mm-hmm.
So I think there'll end up being close alignment between the UK and European regulation, but it won't be as deliberate as it is today. I think it'll be much more, well, we should probably be aligned because it'll make it better for everyone, rather than a very deliberate, let's choose one standard that we should all comply with.
Mm-hmm.
Even today within PSD2, right, there is the local authorities get to implement it in a way that they believe is best for their country, right? And we're already seeing enough divergence in those standards from France to Spain to Italy that there's already weird complexities being formed. The way that IBANs and passporting works already has weird complexities, which it's not a perfect single market yet.
Mm-hmm. Okay, so it'll just be, more weird complexities, or the same weird complexities remain to
Yeah,
be.
we've already got problems of like 16-digit versus 19-digit IBANs and these kind of things moving around. It'll
Mm-hmm.
just be another variation, and unfortunately, whoever's filling in forms, etc., is going to have another set of tick boxes for the UK.
Mm-hmm. It'll be interesting to see. That's definitely for sure.
Yeah, February 1st will be the telling point.
Yes, that'll be interesting. And I suppose for the firms you work with, this is kind of like just taking a total different angle now, just like talking
Yeah.
about something different. Rishi before he was pretty clear that he is not a corporate man. He's not going to be a corporate man. He hasn't been a corporate man. But I expect that you have thoughts on why, you know, working at Visa and then as a firm, you know, taking investment from Visa would bring, you know, a lot of value. Can you communicate some of that?
Yeah. So I think on the being an entrepreneur versus a corporate, right? I'll play the corporate fiddle for the audience, right?
Mm-hmm.
We get huge amounts of benefit, and I personally get a huge amount of benefit from having the Visa brand behind me. If I walk into a conference, nobody actually really wants to speak to me. Nobody actually wants to talk to me about their startup. What they see is Visa, and then they see dollar signs. They're like, that's a big company who could really transform my startup, right?
Mm-hmm.
So we get tremendous access, way above and beyond any like individual reputation I may have or not, right? And I'm
Mm-hmm.
super aware that nobody really likes me. They just like the brand on my t-shirt and the hoodie. So I will wear it every time I have to go to one of these events. It's fine. And that's a huge accelerant, right? Especially when you're younger in your career and you don't have the kind of credibility that people like Rishi have built over the last 20 years.
Mm-hmm.
So having that behind you is a huge, huge benefit. And it gives you, again, leverage to do stuff on a scale that you might not have your own benefit. The dollars I've been allowed to invest or work on deals related to on behalf of Visa, I don't think I would ever find an LP in the public market who would let me have that money and pay me 2 and 20 to do what I get to do at Visa, right? So
Mm-hmm.
that's a huge advantage. I mean, if anybody wants to offer that job afterwards, we can talk about it. But yeah, given where I'm at, it's been a huge accelerant. And then why would a startup choose to work for Visa? It's the same reasons, right? It's the promise of that scale. We operate 163 currencies, countries all over the world, moving trillions of dollars of payment volume every year, right? And we're one of the few companies in the world who can talk about trillions of dollars, which is quite an exclusive club.
Mm-hmm.
But there is a completely double-edged sword to it. And the same as the leverage that it gets you is we are a big corporate and we are a bit slower. And you have structures and hierarchies and internal politics and various things like that, right? So we get this huge leverage, but in order to bring the most of it, you need to work with that organization to bring it with you. And that's got some pain and suffering. It's a skill on its own, I think, and it's probably where it's a very different thing. But if you have the benefit of someone like Rishi of saying, I don't want to deal with that, I'm going to do my own thing, you take that risk and you can manage it yourself. And yeah, it's both are completely valid in my opinion. You find where you land. I
Mm-hmm.
really enjoy being able to have one foot in each camp. So
Mm-hmm.
sitting on the boards, working with the startups who are completely devoid of any of that kind of politics, and then helping advise them as they're trying to sell their products to banks who are 100% about that kind of operational complexity and committees of 100 people who need to approve something. A simple decision and signature takes 2 weeks. Yes, that's fast.
Oh, that's exciting. I know a lot of the
Yeah.
people thinking about corporate careers are just getting, you know, warm and fuzzy feelings thinking about it. But
If you need to get the CFO to sign something, you can do it in under 24 hours. You're winning.
okay. All right. I hope people are writing this down just to set the benchmark. But actually, you mentioned that, you know, you're working with startups and you're helping them sell their products. And I guess for people who are considering starting a company and they're deciding where do they want to take investment from and how, you know, how they want to raise funding, what sort of support can they look for in Visa?
So if you're just starting, then come back in like 3 or 4 years. It would be my answer. So I think we're pretty clear of where we are as Visa, right? So as an investor, we're investing directly from balance sheet. So every dollar that we invest in a startup is a dollar that we could have used to do share buybacks. And so we have to make the case to our shareholders that it's a better investment of their money to invest it in a startup than it is to invest to just give them the cash back. Now, we don't have to make that to them on a case by case basis, but as a whole, the portfolio does. And so, if we're going to be making that case, our CFO wants us to know that we're investing in proven companies who are going to return the equity and it's going to have an impact on Visa's top and bottom line and drive revenue for Visa.
Mm-hmm.
And so, we're signing partnerships and investing in that basis. We're never going to be a good seed stage or angel company investor. And I doubt many corporates really should be doing seed investments because you're as a seed stage company, you've got such a unknown future. Your product in 2 years is going to be completely different from what it is today. You don't know what it's going to do. It's not going to have the sufficient scale to move the needle for Visa. So you're never, ever going to get the attention that you would want from us for it to be successful. Whereas if you can come back in a couple of years and you've gone from having $1 million of revenue to $10 million of revenue, and you've now talking about you're moving billions of dollars of payment volumes or impacting $1 billion of payment, that gets exciting enough for Visa to really commit to it. So for us, and talking to most corporates, I think you need to find what their revenue drivers are and what their big key metrics. Visa is payment volume as the headline. Then you can make sure you're at a big enough scale to be important enough for them. Like, I love talking to early stage startups. The enthusiasm and the opportunities are incredible, but there's no way you can ever get the Visa machine to commit to that. Some other corporate VCs will have kind of arm's length funds who are kind of single LP. And I think they'd be better vehicles because they have a little bit more independence and they have a little bit more of a benefit to take that risk early. But it's at the expense of their now arm's length from the mothership. So you're not really going to get a lot of the synergy and benefit of the big corporate backer behind it. And the final comment I'll say is you'd rather take non-dilutive revenue from a big corporate than equity investment. So if you can go and sign like a $500,000 a year contract from a bank, that's much better than taking $500,000 of equity investment.
It definitely sounds better.
Yeah.
Okay. I hope people are writing that down as well. There's a lot to be learned from this session. And then you mentioned that so I guess I'll just put it this way. So do you think for people who are hearing this and going, oh my gosh, if I start a small scale company, then it's going to be a scramble to raise funding because, Visa won't even look at me until I'm XYZ number of years into it. So do you think that people should start off in a corporate job to get used to the politics and to learn about it, even if they do want to do entrepreneurships? Or would you say jump on into it? Or what would your advice be?
So I wouldn't go and get a corporate job so you can understand the politics. That is not a good use of anyone's time. It's a necessary evil. It's not something we do because we enjoy it. I think you working in a corporate and seeing how kind of big multinationals function is you can learn a lot. And as I say, there's a bunch of the benefits you get of security and safety and all that. If you're thinking about starting your own company because you want to do something different, you should just do it. As Rishi said, the best time to start a company was yesterday, and the second best time is today. And so if you're going to go do it, you should go do it. I founded a company and went bankrupt at 21. So that was good. It took less than a year. I learned lots of things. Don't do what I did. That would be most of them. But you get to experience a bunch of stuff. And especially for students, you've got the lowest opportunity cost at this point in your life. So if you were going to go bankrupt, do it early. Don't do it late. Corporates have got a bunch of benefits though, right? You get structure, you get safety, you get the opportunity to move sideways and see lots of different roles. It's harder to have an impact when you're younger. That's just the nature of a beast. But once you figure out how to work in that machine and you can bring that machine to work on your behalf, it's pretty powerful. I'm bad at career advice because I've never really given any or taken any. I've just always kind of figured out what I should do in about 12 months time when there's an opportunity.
Okay. And so I guess that's the key takeaway. We've got 1 minute left. Do you have any other key takeaways apart from go bankrupt when you're young and otherwise try to get Visa merch so that you look cool?
No, look, it's at the moment, I echo what Rishi said, right? The fintech and banking industry is about to change a huge amount. It's like in a really stressed and difficult position right now. So it's going to be hard, but the opportunities are just absolutely astronomical right now. The number of people who've just been excluded because a lot of the incumbent banks are maybe fat and lazy and difficult to do business with and just sitting there and seeking rent. It's a very good business for them and it has been for years. But you just look at the news from people like Wirecard and everything else that's going on and you think there's definitely an opportunity to do it much better.
We have to hope so.
Don't lose $2 billion is like a good starting point.
Okay, go bankrupt young. Don't lose $2 billion. Try to get some cool merch from Visa. All right. Hopefully, this is all stuff people have written down. But yeah, thank you so much for speaking to us.
I
Hopefully,
really
we'll
appreciate it.
get to hear some more insight from you again. I personally thought it was fun. And I hope everyone watching enjoyed it and you did too. So thank you so much for being here, Anthony.
No problem. Thank you very much for having me, guys, and good luck with the rest of the year if it gets started again in term.
We fingers are crossed. Alrighty. Thank you very much.